All right, folks, let's bring in a market gauge. Your managing director, Michelle Snyder. And Michelle, let me pick up on the conversation with the Federal Reserve. I thought Jim made some amazing points with respect to the pixie dust, but we pay a lot of attention to that pixie dust. And maybe the Fed cannot control everything, but the inverted yield curve has been inverted for a long time. They did a lot of interest rate hikes, Fed fund rate hikes. And it just, so far, it doesn't seem to, I feel like Jay Powell is enamored with the thought of a soft landing, and maybe, maybe that's what he would love to see. But if they really are to get down to 2%, do you think they have to go further, a lot harsher than they've gone?
Well, most likely, yes, especially if we look at history as any kind of lesson. But we're in a very different point right now because the inflation is not just here in the U.S. People still haven't really talked about what happens globally. And right now, we still have a lot of countries that have super high inflation with all kinds of problems that can keep it persistent. And can Powell really do anything about that? Not to mention our own situation with wages. And I read today that shipping rates are starting to go back up again. So he would have to be so super aggressive, it's almost hard to believe that he's really capable of doing that, and especially in an election year. Yeah. I think maybe his hands are getting tied in that respect as well. A lot of talk about commodities, oil now catching a bit. You are a fantastic trader in these areas. Are you getting more aggressive there? I wouldn't say more aggressive. We've actually taken some profit into the run, but we got long a few weeks ago before the thing really started to explode in the oil markets. What we're looking at right now, interestingly enough, and I don't think the proof is totally there because we've seen some fake outs, but natural gas might be bottoming, particularly from a seasonal standpoint. Last year, Europe got a big pass because it had a mild winter. This year, if they're predicting a colder winter, natural gas at $2.80 sounds really cheap. That's where it's trading right now. So we may do a little bit of a rotation more into that area instead of just pure oil.
So Jim and I were just talking. He talked about the fact there aren't any more STEMI checks going out, but there is a bunch of money going out for manufacturing and construction. Those numbers are through the roof, record-breaking numbers. They're not creating the jobs out there. Are they creating the investment opportunities?
Well, that's really basically from a discretionary standpoint that we believe the opportunity is right now. If you're looking at companies like Chemours or International Paper or Dow Chemical, they're doing very, very well. And again, is whether or not the fundamentals are really going to be there to support it right now. The charts are certainly saying that these are good opportunities based on, whether it's illusion or not, the fact that manufacturing and particularly infrastructure in the U.S. will continue to increase with government spending. And we certainly have seen a lot of evidence of that. So that's where we're putting some money to work right now.
All right. Michelle, thank you so much. Appreciate it.
All right. Thank you, Charles.
All right.